Hello and good morning. Today is Sunday, October 27th, and obviously there is no trading happening since all the markets all over the world are closed, including Forex. So I decided to take this time and explain to you what my configurations are for the commodity channel index indicator, or CCI, that I use, why I have it set to these specific parameters. Before I do, let me show you first what the default settings are for the commodity channel indicator and tell you a little bit about it. The CCI is a momentum-based indicator that was created or developed by Donald Lambert, who featured it in his book Commodity Channel Index: Tools for Trading Cyclical Trends. Cyclical trends means up, down, sideways. And supposedly the tool allows a trader to define overbought and oversold levels in the cyclical trends, and then based on these overbought and oversold signal, make a conscientious decision to enter a buy or sell position. Sounds good in theory, but is not so applicable in real life, and let me show you. First, let me get myself out of the way here so we can have a little bit of a better look. And as you can see, this is the default setting. It is set to a period of 20 or 20 days. It has two default levels, minus 100, which indicates oversold, and plus 100, which indicates overbought. The movement is calculated on typical price, and typical price simply means the asset's price on a part in the time period. So for example, we'll sit right here, and this is a time period, and the price is calculated here, and then let's say it's calculated here again, and then let's say it's calculated here again, and then the typical price is taken from these calculations. Again, in theory, all sounds good. Practical, not so good. Premise of the CCI is that when we are in overbought territory, above the 100, we need to look for a possible sell opportunity, and when we are in the oversold territory, minus 100, we should start looking for a buy opportunity. The way this works is that, using right here as an example, the CCI moved above the 100 level, and now you're supposed to wait until it retraces below the 100 level, and then you enter a sell position. Equally true, the CCI moves below the minus 100 level, retraces back above the minus 100 level, and now you would enter a buy opportunity. Again, good in theory, not so good in practice. For number one, once a asset goes above or below the preset levels, there is no guarantee that it will retrace. It may stay, as is evident here, it may stay below the level or above the level for some time. As you can clearly see, let me draw a circle right there. As you can clearly see right here. This took a little while considering we're on a 4-hour chart. Here again, another one that stayed above for quite a while. Here we have below, that stayed below for quite a while. So this is no guarantee that price will retrace. Number one. Number two, even with price retracing, there is no guarantee that it will continue. For example, here it retraced below the 100 positive level, which indicated a sell entry, but then the price went right back up, and then below again, and then back up again, and below again, and then finally decided all around here this area, had you gone by the rules of the CCI as it is standard, you would have had nothing but losing trades. The same happens with if you're in a minus 100 level that now retraces back up into above the minus 100 level, indicating a buy opportunity. And as you can see, just like with the earlier example, this would resulted in several losing trades right here. So based on these actualities, I concluded that this is not the way I wanted to trade this particular indicator. This indicator is mainly used for momentum, volatility, and while it's a good indicator, using it by its default settings simply didn't work for me. So what I did instead is I went into the settings and tweaked and modified until I finally came up with the settings that I actually wanted, that actually worked for me. And the first thing I found out is that changing the period to match the slow MA on its own produces much more positive results. The second thing I found was that setting typical price to close instead further enhances the possibility of having good trades. And the third thing I realized after extensive testing is that different zones will even produce better results. So I got rid of the default, oops, I pressed the wrong button. I got rid of the default zones and I added the plus 40 and I added a minus 40. And now, by the way, I originally started out with plus 75, minus 75, and from there through testing I concluded that plus 40 and minus 40 produced the best overall results. So now with my settings in place, you see there is a complete shift in how the commodity channel index indicator now portrays movement. For example, we entered the market went into a downtrend right about here, and clearly the same happened here. Price went below the baseline, which is 0. From there it continued below the minus 40 level, which is for me not an oversold position with now the possibility of retracing and enter a buy position, but is for me a signal to tell me that we're having a beginning of a strong downtrend and I need to look for a possible sell position, which is what I did, and the results, as you can see, were quite nice all the way here, which coincides with a strong down right here. Now, the way I look at this is as long as the CCI stays below the minus 40, the level that I tweaked it to after extensive testing, I stay in a position. There is no need for me to go out, no matter what happens here or here or here. I simply stay in the position. The only time I consider going out of the position, or I start paying closer attention to possibly getting out of a position, is once the CCI in a sell position either moves above the baseline, or in a buy position the price retraces below the baseline. By the way, because I now use a 55-day period on my CCI right here, which coincides with a 55 period on my slow MA, usually once price from a sell position retraces above plus 40, it will also retrace above the slow MA right here. At that point, I close my position, unless in this case where I am in an active position, I have my stop loss set and my stop loss would be triggered. By the way, the stop loss didn't get triggered here because I entered this position on Friday right here. My based on what I'm seeing here, market is below 40 and price is below the slow MA and the fast MA. Price will more than likely continue down, so we'll see what happens on Monday. So now you know how I use the CCI and why I have the settings that I use for my trading. I hope this was helpful and insightful for you, and I'll see you in another video. Take care and God bless.